What is going on, everyone? Welcome back to another episode of Fear-Free Passive Investing. I'm so glad you are here. I'm glad that you are taking time out of your day to listen to this, to watch this video, to be a part of this movement. I'm excited for today's guest. We got a great one. His name's David Robinson. And if you haven't heard about David, he runs an awesome podcast called The Apartment Investing Journey. And I've actually been on his podcast before, and it's great. I mean, if you're looking for a source of tons of different apartment sponsors, that is the podcast you should check out. He interviews so many people and he does a great job with it. But if you don't know about David, he's the CEO and founder of Canovo Capital, a boutique real estate investing firm. He's an active investor. He's a broker of smaller deals, which we're going to talk about. And he's that podcast host. As a broker and investor, he's been directly involved with over $250 million in real estate transactions. And at Canovo, David oversees all due diligence and acquisitions, capital raising efforts, and investor relations. He does a whole lot. And you're going to see today that he also does like some cool stuff with CrossFit and all that stuff. And I give him a hard time about that, but he's a great guy and I'm really excited for today's show. Before we jump in though, I do want to remind folks that, hey, I am a resource for you. If you have any questions about passive investing, if you have questions about other sponsors, if you have questions about deals, if maybe you're seeing something in other offerings and you're like, what is that? I'm a safe person. You can come ask me. I don't judge for silly questions. So definitely take advantage of that. My email address is fearfreepassive@gmail.com. Or you can always send me a DM on Instagram at Fear-Free Passive Investing. I'm really starting to get Instagram going in 2022. It's one of my goals. So also, if you're on Instagram, go ahead and follow at Fear-Free Passive Investing. I'm trying to put out a lot of content there too. Different stuff that's on YouTube and the podcast. So with that, let's jump in and start talking with David. All right, David, thanks for being here. I really appreciate people taking time out, especially people like yourself who, you're busy, man. It's been 2 years, I think, since we've talked last when I was on your podcast. And, I think we've sporadically emailed in between, but, I wanted to get you back on this podcast to talk and find out what you've been doing now. I've been following a little bit about your journey mostly on Instagram. I think I see you like doing these crazy CrossFit workouts and like doing stuff like that. But, you CrossFit guys, you're crazy, man. My wife started doing that last year and I do jujitsu and I thought that was a cult, but I think
that's crazy. That's crazy.
I think right there. CrossFit's more so, but but so tell us about you, what you've been doing. People who might not know, take us through your life.
Okay. Well, born and raised Phoenix, Arizona, when I was roughly 21, 22 years old, after a church service mission for about 2 years, moved up to Utah, had some family here. Part of that was to work with a real estate broker that I had a connection to. And so I immediately dove into the real estate world. It's pretty much all I've known professionally, aside from being fired from my dad's engineering firm while I was going to college.
Going back to that one.
That's another story. But got into the real estate business, and it's pretty much all I've ever known. Today, I have a small boutique real estate brokerage that serves multifamily investor clients that are looking to buy small multifamily property up and down what we would consider the Wasatch Front, which is basically the greater Salt Lake City market.
Okay.
And about 2-3 years ago, we were struggling to really find good cash flow opportunities for our investor network that we had built up. There's a lot of great reasons to be investing in Utah right now. Cash flow isn't necessarily one of those at this point, especially in the small multifamily space. And so when I say small, we focus on anything under roughly 4 to 5 million in value. That's sort of our niche from a brokerage perspective.
Mm-hmm.
And so we're struggling to find, good opportunity, great growth market, incredible market to be investing in from from an appreciation perspective, but cash flow is really stingy here. And so that I kept putting opportunities out in front of my investor network that I would, be sourcing and my team would source. And some of them would work, and it depended on the investor's goals and what they were looking to accomplish. But many of our investors were looking for yield, and we were struggling to find it. So about 2 years ago, maybe 18 months ago, we really started to say, hey, we've got to, figure out a different source of deal flow outside of our local market here and outside of that small multifamily stuff.
Yeah.
And so that's when we started to explore different alternatives. We even explored, turnkey single family rentals out in the Midwest. Ultimately, that wasn't a business model that I really liked and wanted to be a part of. And we were exposed to, large commercial multifamily syndication. And that really sparked an interest in me personally. And so that's the rabbit hole that we went down. And so that's my background. That's why we got into the syndication space. Today, we still do brokerage business here locally in Utah for our local investors that are looking to buy small multifamily for their own personal portfolios. And then we also partner with experienced operators in markets outside of Utah and then bring our investor network into those opportunities with us.
Yeah, that's great. When you talk about your investor network, you're talking about folks that are buying these deals, right? And operate in, either self-managing or putting in with a management company. You're not talking about you buying them and them investing with you, right?
Correct. Yeah. So here locally, and that's sort of the base and the foundation of our investor network. Now, since we have been doing syndications outside of Utah, that investor network has grown outside of that base. But that base is really the network that we've built up of buyers of small multifamily property here locally in Utah, ranging from, as small as your duplex all the way up to, 20, 30 unit building. Again, our target is $4 or $5 million and below.
Okay. Awesome.
And so what I found was that these people were wanting to buy this type of product, but when I sat them down and explained to them what they should expect from a return profile of that product type, many of them said, well, that isn't exactly what I'm looking for.
Yeah.
And as we had these conversations over and over and over again, that's when I realized, hey, we've got to figure out a better alternative to provide better opportunity that produced more yield for our investors that were cash flow investors.
Yeah. This is kind of a question that I just came up with. So bear with me while I flesh this out. When you say they wanted to buy these deals, less than $5 million, let's just say a quad or a fiveplex, let's just say, and they wanted to buy that. Do you think they actually wanted to buy that? Or do you think they wanted to own the idea of passive income?
Man, that's such a great question and an insightful question because, a big part of what I do is I jump on investor calls, all the time. That's a big part of my weekly schedule. And as I get on these calls and talk with investors about their goals, many of them are unaware of the passive investing option. And as we get into it and we discuss the pros and cons of both, I feel like there's sort of three buckets that I put investors in. One bucket is I have no interest in passive investing. I strictly want to own my own stuff. I love this. This is, I love being able to see it, feel it, manage it, take care of it. That's their jam, right? They want to own 100% of it. And that's wonderful. We love working with those clients. On the other end of the spectrum is they realize either they already know they are a strictly passive investor, or after we explore the different ways to invest in real estate and we help them understand that passive investing is an option, many of them say, you know what, actually, that's who I am. Yeah. And I didn't really realize that was a viable option for me to build wealth and create passive streams of income for myself, that's where I want to be. And then we have, of course, those that are in between. If they find a great deal that does match for what they're looking for locally, and they're happy to manage it, or even hire third-party management, with a small multifamily that they can own 100% themselves, great. And they'll also do passive investing. So that's sort of the spectrum of the investor profile that we work with.
I think more people need to have that discussion, maybe with you, maybe with someone else. But, it's been, I used to run a big meetup in Denver, and we would get new investors all the time that would come in and say, hey, I want to buy, a single family house. I want to get mailbox money. I want to have passive income. And I'm like, that is not the way to get passive income. First of all, it's not passive. Second of all, there's not a ton of income, in markets like Denver and Salt Lake City. You're not going to find yield there. First of all, I mean, it's just a different strategy. They're not bad investments. Right. It's just a different strategy. But I think more people need to have that discussion of like, what do I actually want? Do I really want the house, or do I just want, a little bit of extra money coming in?
Well, and of course, everyone's situation is unique, and there's no, I truly believe there's no right or wrong answer on this. I think people, I know many very successful investors that strictly own their portfolio themselves, 100%. They've done very, very well. So either way, it really comes down to preference and goals. But what I think that there's a common thread in my conversations with investors that come out, and that is there is the busy professionals, right? These people that are making a great W-2 income, or they own a small business that they're actively involved in, right? So these people that have high demands on their time and earn a great income generally lean to the passive investing approach. And then what I found, and the common thread that I found among the active investors, what I would call an active investor, someone who wants to, they're willing to go out there and hunt for deals and get the debt on the property and structure the deal and manage the manager or manage the asset themselves. The common thread is that they actually want to, even if they are currently a busy professional or business owner, they actually want to be full-time real estate investors. And so those are the people that I see often, even if they are a busy professional making a great W-2 income, they have a desire to actually exit and be active, be very active in the business.
Yeah.
And so that's the distinction that I see among a lot of these people is if they do buy something for themselves, meaning they're actually, getting the debt, owning it themselves, they're managing it or managing the manager that they hire. It's because they actually want to do that in the future. Does that make sense?
It does. Yeah. And I think that's, it's probably more common than I think it is, but I tend to I have a soft spot for people who want to ditch their job and be real estate investors full time, because that's what I did. But at the same time, like what I did was pretty stupid. I think if you're making a good living, like, multiple six figures, let's just say, you're not going to make that in real estate by switching over right away. I mean, unless you have a very clear strategy that's, it takes years to build up to that. So I generally tell people, like, don't fix what's not broken. First of all, take baby steps towards becoming full-time, but do that slowly. But, that's a good point. If they want to take it by the reins and go active right away, that's a good way to do it. But, yeah, go ahead.
Well, I was just going to say, I think the idea of being a real estate investor is sexier than actually being a real estate investor.
It is.
Yeah. And so I think that tagline of I'm a real estate investor, I'm a full-time real estate investor, is something that that appeals to a lot of people. But when they actually get into it, I've had many clients who have owned their own stuff in the past, and now they're saying, and it's been just an opportune time, right? So we've built up a tremendous amount of equity here in our properties in Utah. And a lot of these investors are now ready to say, all right, hey, let's exit this. I actually don't want to own this 4-plex or 6-plex or 8-plex. This is a burden on me. I'm actually going to exit this and reposition my equity, which is a phenomenal strategy. And I help people do this. So we help them sell their small multi and then reposition that equity into large commercial multifamily syndications that's highly diversified.
Yeah.
And I think it's a great strategy, and it makes a lot of sense for a lot of people. And so to your point, like, I think people get into it, they buy it, they realize, oh, well, I'm not making a ton of cash flow off of this deal. Yes, the equity has been phenomenal. I love that, but it's also been a headache and a time suck. I would rather just focus on what I really do well, make a great income, and then parlay that equity and cash into passive investments.
Yeah. I mean, I could not agree more. I think the idea of a sexy real estate investor, it's like, and it's perpetuated by HGTV and all that. And, I was talking to some new friends here, and they have nothing to do with real estate, but they thought that was cool. And they're like, oh, is it fun to like pick out paint and all that? And I was like, I've never picked out paint. The last fixture I picked out for one of our apartment buildings was toilets. And it's between 1.2 gallon flush and a 0.8 gallon flush. It's like, I don't know. My life is in spreadsheets. It's not, it's not sexy, but anyway, I don't want to discourage people from being that too, because it's a fantastic living too.
Well, and there's some people that's exactly what they want.
Yep.
They know what to expect, and they love that aspect of it. I have so many clients that love managing their properties.
Yeah. That's a tangent, but let's move on to syndications. How did you take us through your first syndication? What did that look like?
Well, the first syndication that I was involved with was as a passive investor.
Yeah.
And
let's talk about your first active one, because I think that, we focus a lot on passive investing on the show, and I think that's good. But from an operator and sponsor standpoint, I want to take you through, like, what did your first one look like, and how did you bring in investors? Like that's kind of what I was asking at.
Yeah. So let me set the stage for that, because I think it's important, which is I first started when I became exposed to this concept of passive investing or real estate syndications. It was because of my need to find a better opportunity for my investor network. So as I started to explore things, I was exposed to it. I started listening to a bunch of podcasts, even started my own podcast around multifamily investing. And then I would, have active investors that I was working with here locally come on the show, but I would also pepper in syndicators so that I could ask them questions and learn. So that was part of the process. Then I invested passively in my first deal so that I could experience it. I could see what it was like. I could understand how they communicate, how they're underwriting deals, that type of thing. But my first deal that I was involved with as a co-GP didn't happen for roughly 18 months after I really got serious about it. So it was a process. This wasn't something I did, flipped on a switch and said, all right, I'm diving headlong into this. It was a process for me. It was learning, educating myself up front, really spending a lot of time networking in the space, getting to know a lot of people in this space, understanding how to underwrite larger commercial multifamily deals, syndication deals particularly. And then from there, it was really, I started to refine my criteria of what I was looking for in my first deal. And priority number one was operator. Before market, before deal, before asset class, before even asset type, although I was focused on multifamily, so that was naturally, the type of operator that I was connecting with. It was operator. It was sponsor. And for me, on my first deal, I wanted to be working with a sponsor that was investing locally in the market that they were in. That was important to me. Plenty of sponsors that are investing outside of their personal, residence where they actually live. But for me, on the first one, I wanted someone, because I was looking at it from a broker perspective.
Yep.
Meaning I'm here locally. I believe I have a distinct competitive advantage over anyone outside of my market that's trying to find a deal here locally.
Yeah.
So for me, having an operator that was in that local market was critical. So number one, operator, which was boots on the ground in the local market. They had a track record of success, but they were also on a growth trajectory. Meaning, I wasn't looking for an operator who had been buying multifamily for 10 years and had, $1 billion of assets under management. I wanted someone that was still hungry, that was still getting after it. Not to say that someone that has $1 billion under management isn't still hungry, but my point is a lot of those investors that have been investing for 10 years are sitting back and enjoying what they've built, right? Mm-hmm. I knew that I would want deal flow in the future, and so I wanted to connect with an operator that, again, boots on the ground locally, on a growth or a track record of success. I wanted someone that had, roughly 1,000 units that they bought and sold. And 3, that they were still on a growth trajectory, meaning they were still trying to add to their business. And then values aligned. And the only way that I believe that you can truly determine if your values aligned is by spending time with the people. Mm-hmm. And that's hard as a passive investor. It's hard to really get to know somebody. So you end up oftentimes working with someone that you already know, that has moved in the space. So for me, it took roughly 18 months. The first deal that I did was with an operator that I had interviewed on my podcast roughly 18 months earlier. We'd stayed in connection at a very high level. I did some coaching back and forth even. And over time, I became comfortable with how he did business. Mm-hmm. So, and then when I started to prep my investor network and saying, hey, look, I've had a lot of conversations with you all, and these are via email, right? And many of you are seeking better cash on cash return than our market can generally provide right now.
Right.
Would you be interested in another deal in another market that could provide a better blend of both appreciation and cash flow? Mm-hmm. And this is the type of deal that I am considering getting involved with. And so I, gave them a sort of breakdown of what that deal would look like. And I started to prep them, right, for what that would look like and sort of determine whether or not there would be interest. Once I got to a place where I felt like I had laid the groundwork and I could bring some value to the table, I went to a handful of different operators that I selected based upon the criteria that I mentioned to you earlier, and just said, hey, look, this is my situation. I believe I can bring a lot of value to the table from an underwriting perspective, from a business plan perspective, from a marketing perspective, and from ultimately an asset management perspective. And I believe that I have an investor network that has an appetite for this type of deal. Mm-hmm. And I'd love to be a part of your next deal. And I had a handful of operators reach back out, say, yes, would love to have you involved. In fact, these are the deals we're working on right now. Had a couple that said, hey, we're under contract, would love to have you involved, but it wasn't a match for me. Mm-hmm. And so I passed. But one particular operator, boots on the ground in Kansas City, had a great team in place. And so I ended up getting involved there. I flew out, met with the team. Again, even though I'd spent a lot of time, connecting via Zoom and over phone calls over the last 18 months, I still wanted to meet with the team in person. I wanted to preview the asset. I wanted to preview comps. I wanted to be a part of the due diligence process. Mm-hmm. So we went out, and I don't know how in depth, if this is helpful to your listeners, this sort of dialogue of what I'm going through, and feel free to cut me off and guide me any way that would be helpful.
I will.
For me, it was important to really set the stage for my investors. So actually, let me clarify, going back, once I had determined that I'd be interested in doing a deal with this operator, and he sort of reciprocated that, we actually recorded a webinar for my investor network that had nothing to do with a deal. It was just about their team and the market that we were looking in. And so it helped my investor network become familiar with that operator and his team, as well as the market that we were looking in. And then shortly thereafter, we had a deal pop up. They got it under contract, a C-class deal, deep value add play that had a great blend of both appreciation and cash flow.
Nice.
And so that's when I went out to the market, previewed it, met with the team, went through some due diligence, previewed some of the other comps in the area, became very familiar with it, recorded some videos for my own personal use, for my own personal network. And then from there, sent out an email to my investor database saying, hey, we've got a deal under contract. Gave them a preview of the deal and said, hey, we're going to be having, a webinar on this date. Many of them signed up for the webinar, many didn't. And we sent them a recorded version of the webinar thereafter. And, there was a few other steps and things in between there, but ultimately we had, 1.47 million reservations in 48 hours.
Wow, that's fantastic. What do you attribute that to?
The groundwork. I mean, I didn't dive into it, I could have easily done the same thing 18 months earlier, 2 years earlier, as soon as I realized that syndication was something I wanted to pursue. But I felt like I needed to set the foundation.
Yeah.
And really let my investor network know that I'm doing my homework and educating myself on not only large commercial multifamily syndication, but also really doing the best I could to vet good opportunities in sponsors that I think would be worthwhile for us all to invest with.
I think that's a great point, and maybe we need to reiterate that there's a lot of people that get involved, specifically with real estate syndications, mostly multifamily, that come in and maybe they were flipping houses, maybe they were doing small rentals, myself included. I did do those, and that's what I transitioned from. But from a passive investor standpoint, you want to see a track record. You want to see someone who's been doing this for a while, because when you're signing up and you're wiring that money, it's for 5 years minimum, usually. I've had a deal that sold in 2 years, but the thing is, that's not typical. It's probably not going to happen. It might happen. I don't know. But
we've been spoiled over the last few years.
Yeah, exactly. You need to go into it knowing you're going to be illiquid, and you won't see that money for 5 to 10 years. Let's just say you don't want someone in a sponsor that you don't know if they're even going to be doing this in 5 years.
Right.
You don't know if they're going to be around. Maybe they're on to the next shiny object syndrome. Whatever it is, you want someone that is going to be committed to this. 2 years of groundwork. It's not surprising to me that you raised, what did you say, 1.4 million?
1.47.
Yeah, that's not surprising to me, given the groundwork. But it's pretty clear that people trusted you too.
Well, and I did have a unique advantage in that I wasn't making a completely a jump from, let's say, IT or something like that.
Yeah.
It was an adjacent move, right?
Adjacent move. I
already in this space. But I was still not, a syndicator that, was investing. So I had to lay the groundwork. And number one, I had to be comfortable myself. If I was going to bring investor equity into a deal, I wanted to make sure that I had done a significant amount of study and learning and due diligence on the sponsor before I got them involved.
Yeah, I don't know if that was a huge advantage. I've seen people that got involved after I did and are now adjacently doing like self-storage or cryptocurrencies or all these different things. And there's nothing wrong with those. Don't get me wrong. But it's like, that shows to me that you're not committed to one track. And maybe that's your track that you started with. You're like, I'm going to raise for multifamily, for self-storage, for mobile home parks, whatever it is. But to vacillate between different asset types like that, or different strategies, to me, that shows you're not consistent, and you're not. Consistency is what gets these deals the returns that we advertise. And that's something I want to drill into people is, after the deal closes and the sexy part is over, the webinars are done, it's asset management and consistency that gets these returns. It's not going out and finding new deals. It's consistent, action taken every single day.
Mm-hmm. Yeah, that's a great point. And, I think a lot of us that invest passively will do a heavy amount. What the trend that I find is that you do a heavy amount of due diligence on the first deal with a sponsor. Once you become comfortable with a sponsor, there's probably some, my engineers out there that are, underwriting every deal on their own. But the vast majority of people, once they get to a level of comfort with a sponsor, with their communication, with their track record, with their methodology and thesis about investing, then you'll find that they just want to stay in that lane, right? And so I agree with you that there's value in staying very focused. For me personally, that's how I have to operate, is staying very focused.
Yeah. And I'm not downplaying anyone who's, expertly moving between asset classes. That's just how I have to operate.
Sure.
If I let one thing go, then it's like, oh, I'm going to syndicate, I interviewed someone on the podcast last night who syndicates Broadway shows. And I'm like, oh, that sounds kind of cool. Like, but if I allow myself to go down, if I allow myself to go down that road, it's like, there's no coming back. It's like, multifamily is what it is because it's consistent. The returns are consistent, and that's the way I like it. So, that's a huge tangent. I don't mean to, go there, but I guess if I had to, wrap things up, what questions can sponsors ask? And maybe they asked you this, but what questions can passive investors ask sponsors to make sure that they're trustworthy? There's someone like you, they've done the work, clearly you've put in a ton of work. How can other sponsors find, or other passive investors find people?
Well, first off, I think it's a funnel process. And so first and foremost, I think you need to just go and register with a bunch of different sponsors on their websites so that you can start to receive deal flow. Yeah. From there, you can, hop on the webinars and become familiar with who they are at a high level. Obviously, at a very minimum, you're going to have a conversation with them over the phone, and ideally a couple conversations. Mm-hmm. That being said, once you have done, and I think you have to be a little bit heavy. So the questions that you would ask are, the common sense questions, like, how long have you been doing this? What's your track record? Have you gone full cycle on any deals? What's your thesis around investing? Are you doing crypto investing? Are you doing, like you said, Broadway show investing? What do you focus on? What property management companies do you work with? Do you have in-house property management? So there's so many different, you could go and Google questions passive investors should be asking. And I'm sure there's a plethora of, one pagers that'll have all those type of questions. Ultimately, what it comes down to is trying to get to know that sponsor well enough that you have an innate sense of how they operate as a human being. Mm-hmm. Yeah. And for me, that's how I operate. That's how I function. Once I feel like I have a sense of who that person is innately and how they're going to function when things get hard. And are they going to do the right thing regardless of the circumstance? Yeah. Because deals are going to go bad. And you're going to have underperforming deals, especially as we move forward over the next 5-10 years. You just want to know that you're working with someone that's full of integrity, that's ethical, that's going to do the right thing. And for me, that's what I'm looking for above everything else. Yeah. I mean, that gets back to what you were talking about earlier.
the values aligning, and that's one of your priorities, right? Like, you want to have someone with the values that you share.
Yeah. And I would just add, like, how do they show up in the world? Like, go check them out on their personal Instagram page or Facebook or LinkedIn. And how do they show up, even though, that whatever, that's not a crystal ball into their life, but it can give you a sense of how they show up and what their priorities are.
I completely agree. I 100%. And I don't think anything more needs to be said about that. I really enjoyed this conversation. I really enjoy when we invite people on that have really good things to share, but I want to give you a chance to plug what you're doing. So where can people find out more about you and the deals you're doing and maybe the stuff you're putting out there?
Yeah. If anybody's interested in connecting with me, you can reach out to the website. It's canovocapital.com. That's CANOVO capital.com. And you have contact info there. You can register on our page. We have a few different resources for if you're new to syndications, you can go there. And if you're looking to buy a small multifamily property here in Salt Lake, then we can definitely help you with that as well.
Yeah, absolutely. I love that. And I want to plug your podcast too, because you talked about that funnel process of, just signing up for a bunch of stuff. You can whittle that down a little bit by maybe listening to a podcast like yours, where you interview a ton of different sponsors. So you can whittle that down a little bit. Yeah,
for sure. Yeah. It's the Apartment Investing Journey podcast. You can find it on any of the podcast players out there.
Nice.
Apartment Investing Journey. We're about 165 episodes in, and we now release 3 interviews per week.
Wow. 3 a week. That's impressive. I love it.
Just trying to get as many people on that we can.
All right, David. Thanks a lot. Okay. I really appreciate you coming on, and look forward to talking with you soon.
Okay. Thanks, Lucas.